There can be a bit of confusion here because of the similarities between the words, but shareholders are very specifically those people who have bought shares and therefore own equity in a limited company, whereas stakeholder is a broader term describing anyone with an interest in the business. So that would include but not be limited to its shareholders. We can categorise these stakeholders into whether they're internal, within the business, or external, from outside the business. And we'd also consider that each stakeholder group will have its own set of objectives. So one of the main internal stakeholder groups of a business will be their employees, the workers who are working for them. They'll be interested in good pay and working conditions, and as far as possible will want to enjoy their work and get good job satisfaction as well. Managers are employees as well, but we can separate them out as a stakeholder group, as at the top level particularly, they might be more interested in pushing forward the business's reputation and encouraging more growth and profits, particularly if they're on performance-related pay or could get bonuses as a result. And then the owners, in most cases, will be more narrowly interested in returns in the form of profits. External stakeholders might include the shareholders themselves, although there's a little bit of debate about this one, as the shareholders are essentially the owners and in some cases will operate within the business. But for the most part, in the case of public limited companies, shareholders will have bought a smaller portion of the shares in the business and will be very much external to what goes on. But either way, they'll still want the business to be profitable, to see share prices rising and earn dividends on their investment. Customers will want good value for money on their purchases. Society and the local community might be interested in employment opportunities presented, but they'll also want to see a sustainable business which is not causing issues like congestion and environmental damage in the local area. The government will want to see successful businesses which generate employment and contribute tax revenue, but again balancing that against similar sustainability issues. Suppliers will be keen to keep selling as much as possible to the business and also getting prompt payment, so a growing and successful business will be good news for them. And creditors will be in a very similar position. They've lent money, so will want interest to be paid and repayments to be kept up with. And there will be times where these wide-ranging set of objectives will come into conflict with one another. So employees, for example, might clash with management if there's a need for redundancies or pay cuts to protect the future of the business. Shareholders, more narrowly interested in profit, might find this objective in conflict with local communities interested in ethics and corporate social responsibility. We might also find long-term goals like investing in improvements to service provision, which would benefit customers, in conflict with cost-cutting to boost profits more immediately. One of the fundamental debates really is whether a business should exist solely to gain shareholder returns, share price and dividends, or whether they should consider the impact of their decisions across all stakeholder groups. And this debate actually has a name, which is the shareholder versus the stakeholder concept. Backers of the shareholder concept argue that businesses should act solely in the interests of their shareholders. They say that shareholders have provided the funding and investment for the company and so are the most important group, and their interests should be considered first and foremost. This concept would argue that the primary goal of businesses is to make profit, which will be in the shareholders' interests. The stakeholder concept argues that the views of all stakeholders should be considered, not just the shareholders. And so this will provide a more sustainable approach which avoids the potential for short-termism and pursuit of profits at the expense of everything else. And you could argue that in most cases, even if it involves some short-term costs, keeping key stakeholder groups happy will contribute to a more sustainable, growing and successful business in the long run, which shareholders will then get the benefits from as well.